Welcome to another episode of the Wealth Building Strategies podcast. I'm your host, Jeremy Constantino, and today I'm honored to have on as a guest Michael Piehler. Welcome, Michael.
Thank you. Thanks, Jeremy. It's good to be here.
Excellent. So, for those of you that don't know Michael is co-founder and managing partner of North Lone Star Capital, a private equity real estate investment firm, and him and his team own and operate over 128 units, and they are currently under contract for two other deals, 78 and 90 units across North Texas. Is that correct?
So currently we own in Texas, but these other two that we're under contract are in the Twin Cities area, Minneapolis, St. Paul, and then Tampa.
Excellent. Wow, all across. Well, let's just jump right on in. I guess go ahead and how did you get into real estate, and where are you coming from?
Yeah, so originally from Plano, Texas, which is just North Dallas, grew up there. Moved to Minnesota for school, played hockey and golf in college, but grew up. Both my parents were teachers, and didn't really have any family members or anybody in the business world. So kind of just introduced that through friends and like other friends' parents and stuff. So I was kind of the kid that was always interested in stocks. I had my dad open up like a brokerage account for me when I was 16, so I wasn't old enough yet, and so so he opened up the account, and I was trading under his name. But so I was always interested in kind of like the Warren Buffetts of the world, and just kind of like how do you create wealth? And so thought I wanted to get into like financial advising, and kind of getting into the stock route. And so I was an econ finance major in school. And really, when I got into my core investment classes, I just kind of realized like so much of that is out of your control.
Mm,
So like,
yeah.
like you could be the best analyst in the world, but then, Elon Musk tweets something and the price dips, 20-30%. It's completely out of your control. And so that's where during that time, I was just kind of like, man, like I'm not going to be able to one, like there's algorithms that can out trade like me night and day. So even if I get as good as I can be, there's so many intangibles that can affect, how well your portfolio performs. So that was kind of eye opening. That was probably halfway through college, and I was
So where did you go
introduced.
to where did you go to school?
Yeah, I went to Bethel University in St. Paul,
Okay.
Minnesota.
Okay.
So it was kind of around that time I was introduced to commercial real estate. And first of all, it's tangible, like you can see it, like whereas
So how did you get introduced to it, or what was some of the things
yeah,
that
yeah. So one summer, um, one of my dad's buddies, he's a broker in Dallas. Um, Chuck Anderson with Bandera Ventures in Dallas. They do a lot of industrial stuff. And I just met with him, had a coffee with him, and kind of was introduced to kind of the commercial real estate as a whole, and was really intrigued by the similarities between investments in real estate and stocks, and then also just kind of the tangible aspect of it. Like you can actually see it first of all, and then it's less complicated, and you can actually like you directly can determine the cash flow and like the value of the property. And so that was what intrigued me. And so went back up to school, started looking into real estate, got my license. Thought I wanted to be a broker. Currently have my license with EXP Commercial. So I technically am a broker, but don't use it as much. Met with the guy Gavin Hart, my now business partner. He had some single family rentals that we're trying to scale up into multifamily. And so he and I just connected, and then launched what now is North Lone Star Capital, and we do multifamily syndication. So we started to scale out from his single family portfolio into multifamily, and have partnered with some other operators across the country. And then right now we're in the midst of a couple other deals that we're the leads on. The 128 units we own right now, we're just kind of a small piece of the pie, but needed that to kind of get your foot in the door with some of these partners, as well as gain that experience.
So what were some of the things that, going back to your meeting with the commercial broker in Dallas, what were some of the things that really stood out and that he said that really sparked your interest?
So me being, so I was an athlete. I love like sports like that. If I could have played a professional sport, I would have, but it just wasn't good enough. I played everything growing up. So really the competitive nature and like kind of you get what you put into it, like that aspect, like there's no ceiling, like the
Interesting.
sky's the limit. Like however
Interesting.
much you put into it, like that's what you're going to get out of it. And so that part of that industry is what I was attracted to, because if you put me up against somebody else, like I have the confidence that I'm going to be able to outwork you, you know?
Love it.
And so I didn't want my ceiling capped, working, just like a regular W-2 job. So that's kind of what really, like that idea itself is kind of what really got me into it. And then also just, it just clicked with it being so tangible. And then, the fact that like apartments in general are, it's a necessity. Like everybody needs it. It's not something that, like housing, like that's never going away. Like
Right.
you
Right.
you need housing. So that part of it too was just, it made so much sense. And then read Rich Dad Poor Dad, as everybody else in the space has. And that's where I first realized, like, there's a thing called good debt. Like like debt is not always bad. And so I think I took like the traditional route, read Rich Dad Poor Dad, and then kind of got into some of these other real estate investing books, Bigger Pockets, that podcast. And then once I started getting into like the syndication world, then I started listening to like Hunter Thompson and read his book, Cash Flow Connections, or that's his podcast. Raising Capital for Real Estate's his book. So just kind of educated myself as much as I could. Then was also fortunate that one of my professors at school, my finance professor, Drew Whitson, his firm, Endurance Capital, like they own like, I don't know, 2,000, 3,000 units across the country. So I was fortunate to be able to have him as a finance professor, and be able to lean on him post graduation on questions I had in the investment space.
So right when you graduated, did you get a W-2 job or what did you do
No,
right when you graduated?
no, yeah. So I had my real estate license. So I graduated in 2021. So the summer of 2020, I had an internship with Colliers, the
Okay.
brokerage firm,
Okay. Yeah.
and they had to let me go because there's nobody in the office, because that's right when COVID happened, and so they're shut down. Nobody was working, so they're like, sorry, there's no point for you to be here because you're not going to learn anything. So I still had my license, and so I didn't know what to do with it. So I just went the residential route, and so I
Got it.
sold a few houses, kind of worked with, a small brokerage here on the residential side. So I did that during my senior year, and
Oh wow. So while you're still
while I was
finishing up
still,
college. Okay.
yes, yep.
Yeah.
So I did that during my senior
And
year.
playing golf and playing collegiate.
Yeah, I was busy. So yeah, golf was in the fall, and then hockey was in the winter, and then we had a spring golf season as well. And I was trying to sell and sell a few houses. I think I did like 3 or 4 deals, which wasn't bad, but like wasn't a lot. But I mean, still, like it took a lot of time.
It still helps you with the whole process, the whole transactional process. You understand the real estate game just by doing a couple deals.
Absolutely, absolutely, and it also it showed me that I don't want to be in residential real estate. Like the way my brain is wired, it's more analytical, and like I get it. Like this is a huge purchase. Like this is not something you're doing very often. So I understand that, but also like th- it's so emotional, and like it can make sense, but there, maybe you just have a feeling that you don't like this house, and so you don't get it. And you could do all the work, and for no reason, like it doesn't work out. And so that's kind of, I got a bad taste in my mouth on the residential side, and was like, okay, I need to stick to the commercial side. So transitioned as soon as I graduated, got switched my license over to EXP commercial. My advisor, Michael Allis, he worked for Marcus and Millichap for like 15 years. And so he and I were working together. And when we were working together, that's how I met my now business partner,
Got it.
Gavin.
Got it.
And it kind of was introduced to the investment side, and that's where I really lean into that side. I really enjoyed the investment space of commercial real estate more than just being the broker. And so just like leaned right into that. So graduated in May, did EXP commercial for, I still have my license there, but did that for a few months and then started this company in September. So it's been about a year now.
So how are you able to use your license in the acquisitions of your multifamily properties?
I technically I could, but no, I don't. If there was a deal here, which we do have one in Minnesota, I could, but where I use it is through sourcing off market deals. That's where like that's why I still have my license. So I still have access and call owners all the time, trying to source deals for our company, for our
Got it.
firm. And then if it happens not to work for us, I could still help them out and sell it to somebody else if they wanted to.
Got it. It's interesting going back to what you said about the emotional side of the real estate or the residential
Mm-hmm.
for individual single family homes. And there's an emotional side. When you said that, it sparked in my mind is like, that's kind of how I feel about the general stock market. And the stock market is macro and it is based, like you're saying, Elon Musk makes a tweet. It's these emotions make it the stocks go, mass hysteria makes the price goes up, and then massive fear and emotion makes the stock
Yes,
price go down, despite whether or not the company is posting year over year multi-billion-dollar net income gains. It's ridiculous.
absolutely. Yeah. And it's like the transactional volume, like you can buy and sell a stock 5 times in a minute, like the same stock. And so you don't let people, like people don't have the time to think and really analyze what's going on. Whereas the time it takes for you to buy and sell a commercial property is like 60 to 90 days. So there's a lot more rational thinking. And so that's why I don't think there's these huge swings, even if, the same like macroeconomic drivers are happening and affecting both, stocks and commercial real estate. Well,
Right.
you have a little bit more time to think a little more rationally on commercial real estate. 100% agree with that, and that's kind of why, like, I was frustrated because like once you realize that, it's not how well the stock is, like what's driving the prices. Yeah, people's emotions, what they think it's going to be worth, not what it truly is worth.
Right. Right. Yeah, that's why I love real estate and I love commercial real estate too, because like you're saying, commercial real estate is really about the analysis and about the numbers, the financials. When you're looking at a commercial real estate um, purchase to buy, you are looking at it's like a business, and you're looking at the income coming in, the expenses going out, and then there is some forecasting that needs to
Mm-hmm.
be done, but
Mm-hmm.
that forecasting is based on the local economy and the local. You can easily see the job growth, the economy growth, and ebb and flow, and you can very very predictably predict the outcome of whether or not your apartment complex is going to be filled, and what kind of percent occupancy it's going to be. The same thing for a retail space or an office space. You can very very have very good confidence in your predictability on looking forward. But the stocks, you can't predict mass global hysteria, fears, and excitement.
Yeah, totally agree. Yeah, and with commercial real estate, yeah, there's a little bit of speculation, like if you're looking at like what exit cap rates may be in the future, but like you have full, like not 100% control, but you have levers that you can pull to offset, let's say vacancy. All of a sudden, like your vacancy is pretty high. You've got other levers that you can pull to try to combat that. So there's more you can do. You're not just on the sidelines like waiting and trying to write it out. Like you can try
Exactly.
to combat something if there is something that's negatively affecting your returns. Like you can at least do something about it. So yes, there is a little bit of speculation, but like there's so much more control. And versus like the single family, that's why my business partner is getting out of it. Like, yeah, over, the past few years, like 3 years, yeah, his property's value have gone way up, but was it because of something he did? Like, no, he just got lucky. And that's kind of scary. Like it could go the other way. Like he didn't have direct impact in the value of his residential properties. It was solely on the fact that there's a huge supply demand imbalance. And loan, like rates were at all-time lows. So that's something that's why even real estate, like that's why you go from residential to commercial. There's just less speculation.
So your commercial world and that you're working, what is some of your what is your niche, I guess, as far as what you like to do the best, and where do you like to spend your time? Do you like spending time, raising capital, acquiring properties, analysis? I guess what do you like to do
Yeah,
the best?
yeah. So kind of my focus with our company is deal sourcing and then like raising capital. So that's kind of I love looking at deals, trying to find deals, broker relations. Like that's I'll call. I've got different brokers in different markets that I'll give them a call and see what's going on, see if they've got anything new in their pipeline. Trying to establish those relationships. That's kind of my main focus, as well as once we do have something under contract or during the due diligence or analysis stage. I mean, starting to reach out to investors and kind of gain interest and kind of market a little bit. That's something I'm not. It's definitely not something that I've really excel at yet, but is where we're trying to grow. So that we can expand our outreach and have a larger investor pool. Because right now, like, yeah, we have to bring in other partners to help bridge the gap because we don't have a large enough investor base to take down these deals completely by ourselves.
So what when you're having the conversations with these brokers, how do you establish credibility? And I guess what is some of your conversations you have with the brokers?
Yeah, it's hard, right? Because it's like the chicken or the egg. Like, how do you get your first deal without having done a previous deal? And so, honestly, I think just being upfront and honest is like the best route you can take. Like whenever
That's
I'm
good.
having these
That's really good. Yep.
conversations, um, I'm telling them like, hey, we like our firm started a year ago and we're at 128 units and we're growing. Like, do you want to be part of this? Like, you know, you want to help us grow even further? Like, we're gonna grow. It's whether you're gonna help us or not. Um, so just kind of having that confidence and then also just being upfront and honest. Because if you're trying to, post, posturing as if you got all these units and then come to find out later down, best and final, they realize like you've been lying to them. Like, one, like you're not going to get that deal, but you're never going to see another deal from them again. So I think just being upfront and honest, and they get it. Like, not everybody starts out with 3,000 units under management. So they understand like you have to start somewhere. So really, like how we got our first deal was um, leaning on, we partnered with a couple other operators. And so leaning on their track record,
Yep. Yep.
that's how
Exactly.
that's how we got that deal. So I'm upfront and honest. I tell them where we're at, but I say like, hey, don't look at me for the experience. Look at who our partners are. These guys are backing
Right.
us up.
Right.
Lean on them if you have any concerns on our ability to close. And so that's where establishing relationships with other operators starting out is huge because yeah, you don't have that experience in closing a 10, $15 million deal. So definitely relationships with brokers and then relationships with other operators is huge.
That's good. Yeah, I graduated from college with an engineering degree, and I ended up having a W-2 job with Chevron Oil and Gas for I think 15 years before I left full time to be in real estate. And so going back to your story, you've skipped the whole W-2 world and the whole 9 to 5 job. How did your family and friends respond to that? I guess maybe this. So I graduated in 2004. So maybe times have changed, and maybe the world is more open to more entrepreneur. But my parents would have not liked it if I took my engineering job, threw it in the trash, and just went straight into real estate.
No, I mean, that's honestly like, that's a great point. And like, honestly, I haven't really thought about that too much. I think I'm really blessed with parents who trust me and like know that I'm like, it'd be one thing if I'm not working and I'm just playing video games all day, but they know my work ethic and they know
That's
that
good.
what I'm doing, even if I'm not reaping the benefits now, that I'm kind of on the trajectory where I will. But honestly, like, I wouldn't have been able to do it. So I got married right out of school. So
Oh,
I
okay.
wouldn't have, so
Congrats.
that, like, honestly, that helped so much because my wife, she's a counselor. And so we were able to to lean on her income
Okay.
while I
Great.
was kind of getting started. So to be honest, like if I wasn't with her, I would probably have to move back home and live in my parents'
Mhm.
basement
Yeah. Yeah.
because like the first few months, like you're an entrepreneur, you're not really making much. So yeah, I was fortunate to have parents that supported me, and then also a wife who supported me as well. And I did what I could with like working while I was in school, trying to save up. Didn't have to take too many loans out, which was
That's good.
nice.
That's good.
And then just kind of worked as hard as I could while I was in school, and then starting out before I made this leap. Um, yeah, just kind of knew, there's probably going to be a 2 to 3 year um, like timeline before like
Yeah.
we're up and running, and just kind of having those conversations and making sure like my wife is okay with that, and she is. And so yeah, I think
That's
it's
great.
just like I was in a great position to be able to do it, and I recognize not everybody can do that. So I was very fortunate, and I recognize that because I have friends who have said that to me too. Like, I wish I was doing what you did, but man, and my rent's $1,500 a month. Like, I don't have the luxury to be able to just stop and start
Right.
from scratch.
Yeah, so I've been married 12 years now, and my wife's been supportive of me the whole way. And so it's yeah, it is a blessing to have a good a partner that you're completely aligned with. So even from day one when we met, I was working at Chevron at the time with my W-2 job, and I told her from the get-go, I was like, look, my intention is not to stay as a W-2 employee, and to get I want to get into full-time investing, full-time real estate. And she was supportive from day one. And so we saved up and had enough to leave the W-2 job.
That's awesome. Yeah, I think the goal for sure, like once you when I was younger and you realize like there's a such thing as passive income, it's like how do I get that?
Exactly.
That's what I want.
Exactly.
So just kind of the fastest way to get to that point, and I think it's like diving like headfirst right into it.
Yeah, I
And so
really like I really like how you've immediately identified the fastest route is through commercial real estate. And I did not I guess I did not do I didn't take that path. I started investing in single family homes in 2005. So from 2005 to 2015, that whole duration was just single family homes. And I thought there was a barrier to entry into commercial real estate, meaning that
mhm.
you had to have track record, you had to maybe be a commercial broker, and I didn't. I guess during those years, Bigger Pockets it wasn't that well known. I don't know when Bigger Pockets started, but there was this perception that if you're going to start in real estate investing, you start with like a $50,000 rundown little home, and
Mhm.
put lipstick on a pig and paint it, and then rent it out, and then do the next, go up to 100,000, and then go, you work your way up. And so that was my path. But you're proving that you can just jump right into commercial real estate.
Yeah. It's kind of scary when you think of it that way, but no, like I know it's so true. And everyone I've talked to that was like before I made that leap, everyone I talked to said, dude, like just do it. Like I've never heard anyone who said, man, I wish you know, I wish I got into multifamily later. Like
Yeah, you're
everybody's
right.
like, I wish I did it sooner.
Exactly. Exactly.
And most
Exactly.
people say too, like it's same with doing a 12 unit deal versus a 50 versus 100. They're like everybody that I've talked to, it's like if you do like a 20 unit deal, it's like the same time and effort that it's going to take you to do a
Yes.
100 unit deal.
Yes.
You
Yes.
might need more partners, but
Yes.
like more scale, like
Yes.
so it just makes sense to get into that. But yeah, no, I thought the same way. I'm trying to think back at when I kind of realized like I could just get into multifamily. I think like while I was still in school, it was just I kind of had that same idea too that it's got to start out single family, but then yeah, I'm sorry, I don't know exactly when that light bulb went off, but yeah, if you think of it more as a business and not just an individual investing, it's like you just team up with people.
Exactly. Exactly.
That's why you can scale up so
Yep.
fast.
Yep. And the same principles even apply to a passive investor. who, they've saved up, millions of dollars in their stock market, and they're like, oh, I have no experience in investing in real estate. Okay, well, let me go find a residential real estate agent to buy a rental house in my neighborhood. And they kind of have this, I wish I could invest in a commercial real estate. Well, you can.
Yes. Yeah. Yeah. I know. Like driving, I think it may have been in Rich Dad Poor Dad. Somebody said it at some point, but yeah, like driving through the neighborhood and like you're seeing these huge apartment complexes and you're thinking like, who owns that? It's like, well, actually the guy next door might
Yeah.
have a percent
Yes.
ownership in that.
Yeah.
You
You're
know, it's
exactly
it's
right.
not just the Warren Buffetts of the world or
Yeah.
Grant Cardones or whoever, these um huge huge guys, and it could be, and I think, like, I don't know, maybe maybe don't quote me on it, but I would argue like a vast majority, more than you think, are owned in conglomerate.
Yep. Yeah. I'm also from the Dallas area, so we were recently living in Richardson for the last
Mm-hmm.
7 years, and my first project where I was the limited partner in on a commercial office space was in downtown McKinney. I don't know if you've been up
Mm-hmm.
to downtown McKinney, and it's
Mm-hmm.
it's really growing up there.
Yeah.
And the office space was a 3-story office space downtown McKinney, very very up and coming. And so I wanted to invest in that, and there's such a pride of ownership where, like, I own that piece of that building in downtown McKinney, and it's up and coming location, and I'm so proud to have an ownership position in that. And I didn't have to do anything. All I did was just wire some funds, and then now every year I'm getting royalties or getting distributions from that. Like, that's such a great feeling.
For sure. Yeah, absolutely. And talk about like risk adjusted investments. Like you're being able to partner with someone who's this is all they do full time. This is their
Exactly.
full time job.
Exactly.
They're world class operators. Like you're able to lean in on their expertise and partner with someone who, whether you're going to invest with them or not, like they're going to buy it. So being able to,
Exactly.
and instead of, well, like you're saying, use your $50,000 and all right, we're going to go do a fix and flip. It's like there's so much risk with that if you've never done it before. Even if you have done it before, there's so much risk with that. Whereas you can partner with these operators who it's a well-oiled machine. Like they know what they're doing.
Yeah. Yeah.
And I think that's something that a lot of people don't understand as an option, especially like using your 401k or SDIRAs. Like you don't have to just do what everybody says and just put it to an index fund. Like you can actually invest in real estate in a stable asset class, and not just be in the multifamily space as far as passive investments go.
Yeah, so explain. We may have some listeners that have never heard of a SDIRA. You want to explain what that acronym is and what it
Yeah,
is?
your self-directed IRA. So it's a retirement account that um, you can invest in alternative assets, and commercial real estate is one of those alternative assets. There's a few hoops you have to jump through. You have to have a custodian that allows you to invest in these alternative assets, but talk to your CPA. Like most likely, you can invest in these syndications through your IRA.
That's fantastic. Yeah, it's so I still have I have an IRA, and I still invest in the stock markets, and it it just is frustrating because no matter how much, like, starting at the beginning of the podcast, you're talking about, no matter how much you analyze a company and you analyze the previous performance of a stocks, the performance of the stock has nothing to do with the performance of the actual company,
Mm-hmm.
and their balance sheet and their income. We may think or wish that, but it's all based on the global stock market, the
Mm-hmm.
macroeconomics of it.
Mm-hmm. So, tell me a little bit about your investments so far. Have you mostly been an LP, or are you also doing
So
deals
yeah,
where
so I
you're the
started.
operators?
Yep. So I started being the GP back in 2015, and so I started syndicating on our luxury single family properties in North Dallas, Richardson, and Canyon Creek. We also did some in the M Streets, Lower Greenville, North Dallas, and so we were doing some high end luxury ones that needed a lot of construction work. And so So I was the GP on that. I had multiple limited partners with us on that, and so we did a lot. But we knew even doing those that the goal was always to ramp up to commercial. Looking back, I was like, we could just jumped into commercial, but you don't know what you don't know until you start reading the podcast and listening
Mm-hmm.
to so yeah, so I guess we'll finish on that. So we started you talked about Rich Dad Poor Dad, that got your spark. I guess what advice do you have for the listeners that are just starting out, and I guess what resources again do you recommend?
Yeah, definitely consume as much, information. There's so much free information out there these days. Like you can look up YouTube videos. I think commercial property advisors, Google or search that on YouTube. If you want to get into the weeds of like underwriting, he's like it's a free resource. He also has a book. But yeah, I would dive into Rich Dad Poor Dad if you haven't already, Bigger Pockets, Hunter Thompson, and just kind of consume as much as you can. But then also, if you're trying to take that next step, use LinkedIn, use, just Google search reviews, try and find someone who's not too far ahead of where you want to be. Maybe you've done one deal and you're trying to get to five. Like look for someone who's like not too far ahead of where you want to be, and just reach out and try to have a conversation. Most people in this space are like they're honestly really nice, and we're all cut from the same cloth. Like we all have a very similar story, and we all understand you're not just born with 2,000 units under management. So everybody like has like I understand. So if someone's going to reach out and wants to have a conversation with me, like I'm going to do that, because that's what I was doing. I was like, honestly, like I should write down a list of who I talked to before I even like graduated school. Like I talked to probably like 50 plus brokers across the country just because I thought I wanted to get into the brokerage route, but just trying to network and and those guys love talking about themselves too, so just get them talking, ask them about what's going on, and they just won't shut up. They're going to tell you how great they are. But it's a good way to just kind of learn, and they might know someone who knows someone, and then they'll connect you with them. It's definitely a relationship based game. You have to know people, and there's plenty of deals out there. Like I don't see someone as a competitor. I see them as a potential partner. Like
Exactly.
honestly, like
Exactly.
how about we team up instead of trying to outbid each other on this? So
Exactly.
definitely, just and I'm more of an introvert. Like this, it's crazy how I've changed. Um, but just kind of having that base knowledge so I know what I'm talking about has helped. But yeah, it's fun connecting with people in the space. I would definitely say like do not be afraid. Like literally Google, like search someone on LinkedIn, say, hey, I'm so and so, I'm interested in real estate investing. Can we meet up for 15 minutes?
Excellent.
Yeah.
So, I guess same type of advice, but flip it for the maybe somebody that doesn't want to work hard, and that's fine. Somebody that maybe has a full time job and they really like being a doctor, an engineer, and they really like their corporate job, or maybe they've just recently retired, and they really want to relax. So, I guess what advice would you have for them if they want to get into commercial real estate?
Yeah, I would definitely try and educate yourself on why investing in commercial real estate is a good investment, and kind of once you understand that, figuring out kind of what asset class you're attracted
Yeah,
to.
yeah,
There's all
exactly.
different asset classes, but most syndicators and operators specialize in one asset class, and there's a few that kind of do both. But I would say, yeah, try and educate yourself on that, and then honestly, like reach out and have conversations with operators and pick their brains and kind of see what they think about the market, or investments that they have. Take a look at their pitch deck, kind of ask questions, even if you're not investing with them. Like that's totally fine. They understand you're not going to look at a pitch deck and then wire $100,000 the first time you see it. So that's it's totally fine to vet different operators, and like really you're going to see a lot of the same returns. I wouldn't invest based on what somebody's showing in their pitch deck. You should invest based on who the person is and kind of their values. And so you kind of have to have those conversations to really understand like what they're about, and who they are. So Like I always leave time open in my schedule if investors want to have a conversation and kind of learn more about me, because I want to learn more about them, right? Like I don't want to, they're not just a number. Like I want to understand like why, like what is their why? Why do they want to invest in real estate?
That's good. Yep. That's
So
good.
yeah, it works both ways.
Yeah, I really like the one of the advice is the for the passive investor to really understand what asset class they want to go at, and what are they really attracted to. And so yeah, so our brokerage, we're our brokerage and our offerings are commercial office and retail. And so that has its own risks, but it also has its own security, and it's safe in some regards and has its upsides. And it also, along with the asset classes, like what locations do you want to, what markets do you
100%.
want to be in as well?
Yeah, like for office space, like Dallas, Fort Worth versus Minneapolis, St. Paul, night and day during, the past 2 years. So like if you had a bunch of office investments here, the central business district was just shut down,
Wow.
whereas, Dallas, Fort Worth, like it maybe was shut down a little bit, but not nearly as long.
Right.
So yeah, definitely location is huge when you're looking at the different asset classes. There's a lot of moving parts. You can't just pick an asset class or pick a location. You kind of have to pick both, and that's where you should lean on the experts of your operators or your brokers
Right.
and kind of figure out what's best for you.
Right. Excellent. So what are some of your goals and what's next for Michael and your business?
Yeah, I think the goal for us is kind of hitting that 500 units under management. That's kind of like the next hurdle for us. That and then 1,000, I think, is the big mark. So right now we're trying to hopefully get to 200 by the end of this year. Um, we have two kind of under contract, so could be a little bit more than that. But I think the goal is 200 by the end of this year, and hopefully double that, maybe triple that next year. I think we're on a really good trajectory. We've started to really establish some relationships and kind of break ground in some areas, and that's just like that's what that's what happens. Like it takes a couple years for you to really get going, and we understand that. So we're um, we're trying to scale up. Yeah, so we're looking for investors that want to be part of the growth with us, as well as other operators who might be able to add value, or if we can add value to them. Like we're always looking to network and talk with as many operators, brokers, and investors.
Excellent. So where can the listeners find you?
Yeah, so if you go to our website, northlonestar.com, you can find some information on us, but feel free and shoot me an email at michael@northlonestar.com. Shoot me an email, tell me a little bit about you. I'd be happy to just hop on a 15-minute call with you and kind of learn more about what you've got going on.
Excellent. Well, thank you so much for being on our show, Michael. And um, hope the listeners enjoyed this. And that will be a wrap for this episode of Wealth Building Strategies Podcast.